Good morning, everyone. Good morning, good morning. Hello, hello. Welcome to another Wealth Coffee Chat. Good to see a few on now. Hope you're all awesome and well, wherever you are. Got Roz all the way from the sunny coast. Alison, James, Kylie, Tim. Great to see you guys here this morning. Had a few little technical difficulties this morning. Started a few minutes late, but, we're on. We're away. We're into it. Hope you're all awesome and well. Hey, Alison. I like that, Alison. Yeah. There's an upside to delaying your settlement. There's Kevin, all the way from Florida. How are you, man? Good to see you. Good to see you. Hey, listen. Welcome to another Wealth Coffee Chat. If you're new, I'll do the intros. Hello, team, folks. Jason Whitten here. If you didn't already know, you probably do. But if you don't, if you're brand new, or if you're new, or if you're sort of dropping by, say hello. Let us know your name, where you're from, what you're up to. Be great to hear from you and find out what you're trying to do in the world of property investing. We're all keen, mad property investors around here. We've been doing this Wealth Coffee Chat get-together for a fair while now. Each day, each morning, around about 10 past 8 Queensland time and whatever other time it is, wherever else. You can work it out. We hang out, we talk about the world of property, the world of investing, and we try and make a little bit of sense of it, folks, and we try and make sure we keep ourselves focused and on track and ready to go the distance when it comes to these things. So, this is what we're up to today. And today we're going to talk about the cash rate. What happened yesterday? Tell me in the chat. Was anyone paying attention? It wasn't a big deal for me. It shouldn't be a big deal for you. But what happened yesterday? What did the RBA do? Actually, I made a typo in there. It wasn't 2.5. It was 0.25. I think people will be like, what the? Yeah, anyway. You got it. 0.25. Right, that's it. That's what happened. That's what happened. The RBA put the rate up again, which is fine. We knew that was coming, didn't we, folks? We talked about this, right? We talked about this last time. We had a bit of a yarn about the cash rate, ladies and gents, and we talked about where it might end up. So I thought I'd just do a little catch up on that one today. I thought we might have a little look at a couple of things, and look at why I don't think that's a big problem. Matter of fact, why I think it's actually a good thing. Eventually, in the short term, some people have got some financial shock, and that's that's going to be tough for us as property investors. We're dealing with something different. But anyway, we're going to talk through that today. So stick with me, and we're going to have a little bit of a conversation around what that might look like, what it might mean, and away we go. So we had the cash rate. October, November. And it's up to 0.25, right? So we're up at 2.85 or whatever that might be. So where will this go? Where are we expecting the cash rate to go? Because, and you guys were here last time when we had this conversation, so let's sort of just do a recap on it. What is the margin? What's usually the margin, ladies and gents, what's usually the margin on top of the cash rate? Put that in the chat for me now, that the banks will keep what they call a spread or a gap or a margin on top of the cash rate. So that's how they make their profit. What's usually the percentage on top of that, on top of the cash rate? And so, this is kind of a little refresher. Put that in the chat for me if you know what it is. And it depends on the risk and bits and pieces. But yeah, it's usually between 2 and 3%. All right, 2 and 3%. So let's look at this. What we're looking at right now, if we have a look at kind of, the interest rate at the moment is around about that 5%, okay? between 5 and sort of 5.5%. That's the floating rate. I'm looking at getting a loan at the moment. It's coming in at 4.65. Okay, so we're looking anywhere between 5 and 6% when it comes to the interest rate. That's what we're looking at. Depending if it's principal and interest, depending if it's a fixed rate, 2 years, 3 years, 5 years, depending if it's interest only. There's a few things, but we're talking in general right now. So usually there's a margin on here on top of the cash rate. So let's have a look. Let's see if we can peer into the future. Now, it was an interesting one. Did anyone see the media mayhem talking up the other day? And there was some predictions about what the RBA would do. What was the? Did any of you pay attention to the malarkey that was going on in the media about inflation? And I don't know if you saw it, but there was a few turkeys out there going, inflation's out of control. The RBA's got to put up the rate, 0.5. They've got to smash it, 0.75, all this sort of jazz, right? So here's the drill, right? So we've got the fixed rate going, the variable rate. This is interest rate, by the way, folks. This is interest rate, variable rate going flat. The fixed interest rate going up a little bit. Matter of fact, a week ago, yeah, good, Alison. Don't pay any attention because there's nothing that we know where this is going, folks. It's the point of this morning. I just want to sort of, I just want you to get, not that one. Hello? I just want you to, we can see where this is going, right? Okay. For the moment, there's kind of like there's some momentum happening. And yes, there are some things out on the fringes that might mess up where we think this is going. But let's talk. Let's talk about this. I'm pretty certain that smart people know what's going on. Right. So we're here, we've got inflation. Inflation's going that way. And I'll get Andy Fenton on one day to talk about headline inflation and core inflation and all this sort of stuff. But really, what happened was inflation is things that is out of people's control. People aren't out there spending money willy-nilly, right? So the consumers aren't out of control because they've got lots of cash. What is happening is petrol and food and things like and electricity is going up way out of their control. They are basics. So by and large, that inflation is not driven by consumption. So the RBA is taking a little bit more of a conservative approach to it. That's what's going on, right? Anyway, I'm not an economist, but I do listen to smart people, and I do understand a few things about where do we source good information and try and understand a little bit about what's going on. Can you tell the future? No, you cannot. Can you gather good knowledge and information and understand it a little bit? Yes, you can, and that's what we're doing this morning. So where do we think the cash rate will go or get to? Tell me in the chat. Do you know or have you any inkling where the cash rate looks like, or the market, the aggregated opinion of thousands and thousands of clever people around the world, economists, financial architects, bankers, governments, you name it. Tell me, do you have a best guess where you think the cash rate might go to? There is market buying of future cash rate bonds, and Sharon's onto it, Tim's onto it, 3.5, 3.5, yeah. So the market, let me show you this. There we go. I'll make that a smidgen bigger. Let's see if I can make that a little bit bigger to see where we go. Yeah. So check out this. This is the Australian 3-year bond rate. So 3-year bond rate. This is the marketplace. Now stick with me. Oh gee, I've got a spammer on here. Hang on. I gotta get rid of them. How do I block them? Give me a sec, folks. I've got a bit of a spammer on the on here. Block, and then block on YouTube. Block on YouTube. Block on YouTube. Sorry, yeah, got a little bit of a spammer there somehow. Hopefully that's blocked anyway. All right, let's get back to our show. All right, hopefully that. Anyway, don't click those buttons, folks. All right, don't click anything there. Anyway, this is interesting. Live television or live something or other. Anyway, so you guys get it, right? So let's get back to the show. We have 3-year bond rates. So what's the future look like? So the market at the moment, yes, they are talking about what they believe. The market believes, let's have a look at this. The market, like a little while ago, they were sort of thinking, okay, it might be high, right? And then it might be low. And then, you know, it's kind of settling into this kind of this area here, right? 3. And you know what happened yesterday? You know what happened when the RBA announced the cash rate of 0.25, the market went down. It went down, folks. Now, that's interesting. Anyway, I don't know much about the share market and those sorts of things, but what I do know, listening to some smart people, is that when you understand hang on, I think I'm going to do the 5-year. Can we do the 5-year bond here? Yeah, 5-year, 10-year. That's the thing. Okay, you know, what does it look like? You know, what does the future look like? Where are their predictions for the future? There you go. Okay, so 3.28, the Australian bond rate for 3 years. So what does that mean to us? Well, if we're thinking about our investing, and if this is 2.85, you go 3.28, let's call it 3.3. You know, we've got maybe 2 to 3 2.25% cash rate rises coming. Like that's the idea. Anyway, everyone following along? Hopefully you are. Let me know if you're still with me or the spammers knocked us off track here, folks. Let me see here. Yeah, blocked. All right, good. Let me know in the chat if you're still with me. I want to make sure that Restream didn't shut me down. All right, so what does that mean for us as investors in this world of investing? Well, obviously our costs are rising, and when we have a look at our cash flow, and I'm going to quickly snapshot over to here and show you our share screen, and it's going to maybe make that a smidge smaller. There we go. Hopefully that'll fit in here. Cool. So let's just check out our cash flow calculator. I've chucked a property in here just quickly, 720. That's a regular house at the moment. You know, using equity to buy it, 5% interest only, etc., etc. Renting for $600 a week. What does the cash flow look like over here? Well, before tax, negative 13. After tax, using your PAYG variation, negative 3. So we're like, okay, well, you know, this is, and if we whack that up, 5.5, all right, interest only, another 50 basis points. It's the difference between $3,000 and $6,000 negative cash flow. All right, what does that mean for us? Okay, we've got to manage that. And the one thing that we all know that will be able to help us counteract this in the future, ladies and gents, will be what? Tell me what you guys think we'll be able to. This is a no-brainer as far as I'm concerned. What's going to help us with our cash flow on our properties over the next 12 to 24 months? Put that in the chat for me, because this is kind of a conversation. We know where the cash rate's going to go, or we're fairly confident that smart people are on it, outside of some other disasters. You know, rent is going to increase. That is for sure. There is rental there is rental changes in many places. You know, look at Brisbane, Adelaide, Sydney, you know, fantastic. Quarterly, you know, Melbourne units, Adelaide houses. Like, you know, you have a look at this. Rents are going up. Rental demand is going to be massive. And I'm going to do a big deep dive on the supply shortage disaster we have, ladies and gents, folks, at the next mentoring, actually. But let's just look at this. Let's look at this. I'm going to put my rent up. I'm going to put my rent up on my investment property. And let's put the rent up $100, right? Let's put the rent up $100. So before we do that, we're going to quickly check. I just want to show you. So here's our negative cash flow over here. Negative, call it 6,000, right? I'm going to put the rent up. I'm going to put the rent up $100. Go to 7. What does that do for me in my position? Okay, drops it to 2,000. That's better than negative 6,000, right? Rent goes up again. So I think, and there we go, you need $200 or thereabouts. There we go, main camera. You need $200 of rental increase to counteract the cash flow with the property. Okay, I hope you saw that. And today started a little bit late, so I'm not going to dine out on it. But right now, where we are, look into the future and understand this. And you know, there is 1 million people going to enter the country, 1 million net people going to enter the country, right, in the next 4 years. We are at a severe shortage, the worst supply we have seen in decades. The job market is pretty strong. Most people have got jobs. We need some more people to come into the country. And our costs have increased. There is only one way, and we've been talking about this for yonks. So I called this a year ago, 2 years ago, and you guys remember this. The rents are going to go up. It's a fait accompli, as far as I'm concerned, between $100 and $200 of rental increase in the next 2 years. No-brainer. Absolutely has to happen for many reasons in the world of property investing. So there you go. Hopefully that made sense today. The cash rate went up a bit. It's going to go up at least 2 to 3 more times. That's the thing. So there's no surprises. I wouldn't be surprised if they do one more in December, and then leave it alone for a little while. But maybe they want to leave December alone. Hey, who knows? It's just guessing now. It's pontification. Anyway, there you go. All right, I'll move on. Yeah, and there's a bunch of things that the government are looking to do, but it won't satisfy. So social housing plans and stuff like that, Tim, it will not satisfy the mid-range, the quality range marketplace. The quality range marketplace is actually going to diminish, folks. And that's where, for all of us, when we've been talking flight to quality for so long as investors, man, it is, we've been on it. We've been on it. And if you've got a quality property, that will continue to go. The government might supply the bottom end with build to rent and a few other things, but that's really not going to that's not us. That's not our market anyway. So it's interesting, isn't it? Anyway, I'm just rabbiting on. Let's call it done and dusted. Wealth Coffee Chat over and out for Wednesday, the 2nd of November. Hopefully you had a win yesterday on the horses or something. I didn't go. Anyway, there you go. Anyway, stop talking, Jason. You need to finish. All right, that's it, folks. I'm done. You guys be awesome. Thanks for joining me. Remember, 2 things. Buy well, never sell. This thing's a marathon, not a sprint. It's going to take time. All right, folks. Take care. Join me tomorrow, same time. Bye for now.